Hello, everybody. Catching Rockets here. Today, I'm going to cover part three of my trading series. Today, we're going to be talking about um, points of control. Before I jump into that, actually, let me cover this really quick. If you've watched part one and two, I'm still really sick. And so, if you hear me clearing my throat or coughing, or if my voice sounds funny, I apologize in advance. But really want to try to get these videos out to people, even though I'm not feeling great. Um, anyway, so let's get into it. We're going to be talking about points of control today. Um, right now, I'm looking at TradingView. If you're using TradingView to get the points of control, you're going to need the VPSV indicator, which is only available to people that are subscribed to TradingView. So you can use the cheapest subscription. It's like roughly $15 a month, and that will give you access to this indicator. So again, you would just go to indicators like I have and search for VPSV, and it will come up volume profile session volume. This is the one that you want. Once you have that on your chart, you want to go to the 30-minute time frame. If you trade on Thinkorswim, there'll be a link in the description to tell you how to get POCs on your charts for Thinkorswim. So on Thinkorswim, you're going to want to be on the 30-day, 30-minute time frame to look at POCs. On Thinkorswim, you can also go back to the 1 year, 1 day if you want to go further back in time to get POCs further back than 30 days. But for most cases, you want to be on the 30-minute chart to find your POCs. And what I do for trading, I have roughly 20 charts I look at every day. And so after the trading hours are over, I'll go to those 20 charts and I'll just add in the latest version point of control and remove any that are no longer being respected by the stocks. So with VPSV turned off, you can see those red lines go away. But so those red lines are going to be our points of control. Right now, you might be asking, what is a point of control? Point of control is going to be the point at any given day where the most trading volume took place, whether that be buying or selling. So it's very important because, that's where the most buying and selling takes place, and they end up acting as support and resistance. What I like about POCs and virgin POCs versus regular support and resistance is POC is completely objective. There's no subjectivity to it. I have a clear line on my chart where the point of control is, so it's not up to me to draw some random rectangle on my box or on my chart where I think there's support and resistance. I have a clear-cut line where support and resistance shows up. Virgin POCs act as magnets for price. So anytime where you have like a virgin POC, like I have this one here, or I have one above at January 11th, and no POCs to the downside, and this is a current chart as of today. It's currently February 27th of 2022. More likely than not, Amazon will get pulled up to one of these virgin points of control in the coming trading days. So that's what I'm expecting. So as of right now, I've used a lot of terminology that I haven't explained, so I'm going to start explaining that. A POC is going to be, like I said, the point on a chart where the most trading took place on a given day. And then you've heard me mention virgin points of control. So like I said, I have one here, February 9th. A virgin point of control is a point of control that was formed. Let me zoom in on this particular day here so I can give you guys a better explanation. So, for a virgin point of control, on the day that it was formed, it can be touched by the stock price indefinitely. It doesn't matter. After hours and pre-market, it can still be touched. On the following day, once price action leaves this area, as long as the stock price doesn't come back and touch it, this will remain a virgin point of control. Virgin point of controls are going to be stronger than POCs, points of control. They act as stronger magnets for price action, and they'll be respected more often or they'll be respected like way more than a point of control will. And in a minute, I'll explain all of that, and it'll start to make a lot more sense. So hopefully everybody understands the difference between a POC and a virgin POC right now. Sorry, I just drew all of these, and some of them are not completely accurate, and I'm a little bit OCD. So the other way that we look at this is we have responsive buyers down here and responsive sellers up here. Up at the top, we have initiative buyers, and down at the bottom, we have initiative sellers. So a responsive buyer is going to be, I'm just going to discuss this the same way that my mentor teaches it. A responsive buyer is somebody, let's say, for instance, that wants to buy a PlayStation 5, because that's a very hot commodity right now. They're hard to find. You can find them if you're willing to pay more on the secondary market. But there's people that aren't willing to pay more, and they're willing to be patient and wait for price to come back down to retail. So down here, those retail buyers are going to be our responsive buyers. They're also up here, our responsive sellers are people that, bought cheap and are willing to sell high as an initiative seller up here. As a responsive seller up here. So initiative buyers, they're not worried about getting something for retail. They might think they have information, like let's say if we're looking at a stock that has a chip shortage and they think that that's going to drive the price higher, they're willing to buy up here at the higher price, hoping that price will go higher. And those same initiative buyers will be initiative sellers sometimes, where they'll buy high and sell lower or sell down here. The other way to look at this is just think of yourself as a trader. If you're an option trader, this doesn't really apply to you, but think of yourself if you were buying stocks. If you buy stock here on Amazon, and then the very next day it starts dipping down and keeps going lower and lower and lower, and then finally you start to see it getting close to where you bought again, what do you do the next time price action gets to where you bought? Most traders, most retail investors are selling break even here. They're just happy to get their money back, live to trade another day, and move on. My goal is to teach you to not be this person that buys here and sells here. You want to think like the market makers, and you want to trade like the market makers. You don't want to be buying here and selling break even. So in the inverse, we have, market makers down here. Let's say I place a large dark pool order for Amazon at $2,777. We'll just say $10 million worth, or no, actually, let's say $200 million worth. And I start to get filled here on the dark pool, and people see those dark pool orders coming in, which causes retail to start buying as well, because they see there's a big whale buying Amazon here. So let's say I get a partial fill here for $50 million. Stock price comes back up, comes back down. I get filled some more, another 50 million. Back up, back down, get filled more for another 50 million. Then stock price leaves. These market makers, they don't chase price action. So they got filled for 150 million of their $200 million limit order, but they're going to leave that last $50 million limit order right here waiting for the stock price to come back down because they know eventually it will. So we have a POC here and a virgin POC here. So a few days go by, stock price comes back down, I get filled on my last 50 million here, and then it just gaps up overnight. Or actually, I don't think that is overnight. Can't really tell. Sorry. Yeah, it is overnight. So then we gap up. So these market makers, they might take profits here. Who knows? I'm sure they do. And so that's the difference between, a retail investor and a market maker, or responsive buyers and initiative buyers. If I turn off this volume profile here, you can see, price leaves, finally comes back up. We almost touch this. With these, you're going to want to draw. I'll teach this in another video. I don't want to make these videos too long, but you're going to end up drawing supply and demand zones, based on your POCs. And like I said, in another video, I'll show exactly how to draw these. But so it's going to be a range, just like with supply and demand. And so with here, when we come up and tap this, great place to enter for puts, or to short a stock. Same thing down here. Great place to go long, great place to go long. And if you start to draw these, around the other POCs, again, I'm not doing this accurately. I'm not trying to make this video 30, 50 minutes long. Like I said, I'll cover this in depth in the very next video in this series. But when you start to get these supply and demand zones around your POCs, you start to get very clear defined entry and exit points. Here you can easily go long, good, sell here. Same thing with here. You can go short here. This is a good enough move to make plenty of money, and go short again here. I'm sure you could see I don't really need to highlight the specific areas on the chart, but you can see how this works out, where we come down, touch, you would go long here, or go long here. So once you have these POCs on your charts, you have a good idea of where, sorry, I need to cough. You'll have a good idea of where price action is going to go. Because you could see they literally go from one to the other and then back up. Eventually we're going to come back down to this one, come back up to here. So they really start to act as magnets and support and resistance areas. And once you have them on your chart, it just makes trading so much easier. Like I said, when you leave this area to take long, when you leave this area to go long, you could even go long here again. Short from here, very clear and easy. This might not look like a big movement, but it's enough to make, probably 100%. I think that's really going to be it for POCs and virgin points of control. Like I said, so I didn't say this, but the only two places I know of where you can find points of control for charting is on TradingView and Thinkorswim by TD Ameritrade. Again, in the description, I'll link how to get POCs on Thinkorswim. But I get questions a lot about like, oh, I use Webull. How do I get POCs on Webull? The answer is either get TradingView and pay that monthly subscription, find them on the charts here, and then just draw the lines in on Webull. And I always label them, so when I'm actually trading, I can see what the date is. And POCs are generally respected for about 30 days, whereas virgin POCs will be respected indefinitely until they get touched again. So yeah, I think that covers it. Like I said, if you're using a different platform, Webull, eTrade, I don't know, whatever, you can find the POCs in TradingView, and you can transfer them. And you can transfer them into your charts on whatever trading platform that you use, whatever you like. But anyway, you can see how these just keep getting respected over and over and over again. It's very clear. All right. Next video, I'll cover how to draw these supply and demand zones with POCs. Anyway, hope everybody has a good rest of their weekend, and much love. I'll catch y'all later. Bye.